if we do get a release of strategic reserves, how long will we need it? Just looking at next year, which we might get to a situation where we might not need more oil next year.
Yeah, I mean, and that's our view there, right, David? I mean, our assumption is that as early as first quarter of next year, that the global market tips back into surplus. We're expecting very strong non-OPEC supply growth, somewhere in the region of 2.6 million barrels a day. And so, yeah, I think all the market needs, or all the US wants, is something for the short term. And that's why we're looking at a potential SPR release. And I guess that's also why OPEC have been reluctant to give in to US demands to increase output more aggressively, because they know what's around the corner. So, yeah, our view is that the market shifts back into surplus next year, and that does see prices trending a little bit lower from current levels.
And in the high 70s, whether that's West Texas or Brent, or let's even toss in natural gas, because we are seasonally at the time of the year when we need to start talking about natural gas. Do you think most of the factors have been priced in at this point?
For the upside, absolutely. I think the upside's mostly been priced in. I think to the downside, there's a few factors which could still weigh further on prices. Firstly, obviously, an SPR release announcement, particularly if it's a coordinated announcement. Secondly, if we do see further European countries going into lockdown or tightening restrictions, obviously last week we got Austria announcing a full lockdown from today. If we see that spreading to Germany and other European countries, clearly that's going to have a hit on sentiment. And then I think on the supply side, something that we should not forget about is that Iranian nuclear talks will resume this month. So if we do see a quick deal there, we could potentially see Iranian supply returning to the market at a fairly quick pace. Our view for Iran is that basically we finished 2022 with 1.3 million barrels a day of additional supply.
Returning to gas, Warren, we've been looking at perhaps these troop movements around the Ukraine on the Russian side. How would a potential invasion of the Ukraine affect gas prices, given the whole supply network, supply pipelines, etc.? And also, perhaps in Europe, having to weigh this up in terms of, do we buy this natural gas from Russia? But they have no choice in many ways.
Absolutely. I mean, Ukraine is a key transit point for Russian gas into Europe. So definitely any sort of disruption or any sort of invasion there would certainly be constructive for prices. But I think if we look longer term, our view really is, well, it's really Russian gas, which is going to dominate and basically dictate price action for gas prices over the coming months. Obviously, Nord Stream 2 was expected to ramp up and improve the supply situation. Well, clearly that's not happening anytime soon. Our view is Nord Stream 2 is unlikely to come online this winter. So really our expectation is that European gas prices are likely to remain volatile and obviously elevated over the winter months.
Warren.
And given the sort of the growth in LNG trade, that has ramifications for the Asian LNG market as well.
Warren, just moving now to what's happening with the metal side of things, and of course we keep talking about what's happening in China property. That has a direct correlation, so give us a sense of where you think the various components of the metals complex go.
Yeah, certainly construction is obviously a key demand point for metals demand. I mean, if we just look at steel rebar prices in China, they've come under significant pressure in recent months. And that's given the slowdown we've seen in construction starts in China. And then again, if we look at iron ore, there again, that's come under significant pressure, but part of that will reflect the production steel cuts that they have in place within China. But yeah, certainly going into 2022, our view is that the supply and demand balances for most metals will loosen up. And that does suggest that we see some downside in the majority of metal prices going into 2022. I'd say the one exception is probably aluminium. We do see some structural deficits coming through for the aluminium market, and that does suggest that Ali prices should continue to trend higher from here. So our view is basically an
And
average of
that's not
3,000.
that's not just priced, right? What's your target then for prices of aluminum?
Yeah, so we're targeting almost an average of $3,000 a ton over 2022.
Got it.